Good morning, everyone, and welcome to the CBI's SME Webinar. For those of you I've yet to meet, my name is Deborah Fraser and I'm Director for Regions here at the CBI. Now, today's session is focused on cash flow crunch, which feels like an incredibly important topic. We'll be looking at cash flow and potential triggers for wider problems as businesses are or are trying to get back on their feet. So we're going to be covering a number of less than cheery subject areas. To be honest, we're going to be looking at debt repayment, insurance cover, rent arrears and tax deferrals. We're also keen to sort of have conversations around adapting workforces as operating models to deal with new levels of demand are implemented. Obviously, some are doing incredibly well, but also some are having to manage a very much a shrunk operating system. And all this is happening within the context of government support coming to an end. So interesting time again. Today we're joined by Chris Wilford, who's Head of Financial Services at CBI. I know many of you will know already. And we've got Jennifer Tankard, Principal Commercial Finance at UK Finance. The format of today's session will be as normal. We will start off with hearing from each of our speakers, then we'll open things up into Q&A. Do go into your chat box and send in any questions that you might have. Really keen to get as many as possible. Also, and I know Jennifer, there's a couple of topics that you're particularly keen to get some feedback on. If you have any comments on anything that's being made today, please do share those as well. The CBI is doing a lot of influence work. We still have weekly conversations with the Treasury, so do give us your opinion as well as conversation, as well as questions, and I will do my best to extrapolate between those two. So I will put myself on mute now and hand over to Chris, who will set the scene about this new phase of reopening and some of the challenges that are being observed. So Chris, over to you.
Thank you very much, and great to be on the webinar today to discuss this important topic at a really crunch time, particularly as businesses plan ahead over the summer and into what is shaping up to be a tricky autumn. So the government acted quickly and at speed to deliver a financial support package for businesses over the past year. The CBI worked relentlessly with government, lenders and the British Business Bank to shape the COVID loan package, as well as the Pay As You Grow and Recovery Loan Scheme for the next phase of support. It also worked with the Association of British Insurers, insurance brokers and businesses to secure the £10 billion trade credit insurance guarantee and the subsequent extension to the end of this month. Now, as we enter a reopening phase, a host of competing challenges present themselves as the economy unlocks. This includes managing debt repayments, insurance coverage, rent arrears, tax deferrals, and adapting workforces and operating models to deal with new levels of demand. Alongside this, a host of inflationary pressures are presenting themselves. This includes increased pricing. I believe cardboard is up 15% alone, as well as building materials significantly increasing in price, as well as wage increases with a shortage of labour in key sectors such as retail and hospitality. Whilst the pandemic put the economy into a freeze, the world has not stood still. And if these competing demands are not managed correctly, there is a very real danger that a delicate cash flow balance is knocked out of kilter with real consequences for business and the wider economic recovery. We're concerned at the CBI that a trigger event, rent, debt or tax, could cause a cascade event. For example, a pub just getting back on its feet is hit suddenly by all these liabilities it built up and can't survive any longer. It is important as ever that larger businesses do their bit and pay their suppliers promptly as well in this environment, supporting resilient supply chains through this period. So what next? The CBI secured the suspension of wrongful trading provisions throughout the pandemic and is in a regular dialogue with the Insolvency Service. Whilst an insolvency wave has been predicted by many, we are confident this can be managed if we get the balance right. Whilst prospects for the economy look good and we've seen improved optimism, it is important businesses consider their exposures in the round and start those valuable discussions with lenders, insurers, landlords and the tax authorities now. This could include taking advantage of debt forbearance measures like Pay As You Grow for bounce back loan customers, or making sure you have the right information in place to ensure things like your trade credit insurance coverage continue. The Business Secretary has also confirmed in a letter to the Institute of Directors and R3, the professional body for the insolvency industry, that there will be managed arrangements for tax liabilities. This also coincides with the recent announcement of the extension of rent measures for the hardest hit sectors. The CBI, along with other business groups, is also supporting the Good Business Pays campaign to promote prompt payment. It also worked with other stakeholders to develop the Business Banking Resolution Service, BBRS, to help businesses access an independent resolution service for their banking disputes. This service went live earlier this year. As businesses talk with their lenders in this time, it's also important you should raise LIBOR transition, the common interest rate benchmark, as this rate is changing, and it's important to make sure your contracts are all sorted. So, whilst there's lots of optimism and we see the economy rebounding in a really good way, actually there's still a lot of uncertainty out there, and for a lot of businesses it's really important that whilst you've got your head down or you want to make the most of this period, you do make the time to plan and prepare. Speak to your lenders, your advisors and insurers, as well as the tax authorities, and do it early. Don't wait until it is too late because you think you will give off a negative impression. Look at what grants you are eligible for and so on as well. Debs, on that note, I'll pass back to you.
I'm going to hand over to you, really just for a bit of an overview of where we are from a UK finance perspective, you know, what you're seeing on the ground, what's the landscape, especially from that SME perspective, and any main reflections that you've got in terms of cash flow, what you're seeing in that SME market.
Thank you very much, Deborah, and thank you very much to the CBI for inviting me this morning, and always delighted to speak to businesses out there on the ground. So as many of you will know, UK Finance is the collective voice for the banking and finance industry. We've got about 300 firms across the industry that are our members, and I lead at UK Finance on access to finance for SME issues. So our view sort of reflects some of the comments that Chris has just made. Very mixed picture across the economy and even within sectors, with some clear winners coming out of this crisis, but others really struggling for a range of different reasons. We're still not seeing significant levels of companies in distress coming through, or companies going into insolvency. And in fact, insolvency levels at the moment are much lower than they would usually be in sort of normal times. Many businesses that took out a bounce back loan scheme put those directly on deposit and haven't actually drawn those down, and are still hanging on to that cash, which implies that they're taking a very cautious approach to financial management. And in fact, business deposits are about 20 to 30% higher at the moment than they were before the crisis. So we know there is a lot of liquidity out there as well, and that's quite interesting as well. And we also know that many businesses are coming out of those schemes or haven't taken up government guaranteed schemes, and are now, when they're looking for finance, are quite content to take out sort of business as usual lending, so standard products from their lenders. I'll just talk a bit about the schemes, the coronavirus business interruption loan scheme and the bounce back scheme. And just a reminder that these are government schemes delivered through the British Business Bank. The bounce back loan scheme has obviously now closed, and payments for those that have taken out the bounce back loan payments are now falling due. But the government did introduce a number of what we call pay-as-you-grow options. So on the bounce back loan scheme, the pay-as-you-grow options are that you can request an extension of your loan term from 6 years to 10 years at the same fixed interest rate of 2.5%. You can reduce your monthly repayments for 6 months by paying interest only. And that option is available up to 3 times during the term of your bounce back loan. And you can take a repayment holiday for up to 6 months. you can't refinance now that the scheme's closed under a bounce back loan scheme, but you could refinance under the new recovery loan scheme, and I'll talk a bit about that in a moment. On the coronavirus business interruption loan scheme, again, that is now closed. There wasn't an equivalent to pay as you grow introduced for CBILs. In limited circumstances, a lender may be able to extend the term if forbearance is required, and other forbearance may be allowed in accordance with lenders' usual policies. And you can refinance, again, the CBILs facility onto the recovery loan scheme. The new recovery loan scheme, which is the replacement to CBILs and BBILs, at the moment is running from 6th of April to the end of this year, so until December 31st. So that's your time to take that up. You can borrow between 25,000 to 10 million on term loans and overdrafts, and 1,000 to 10 million for asset finance and invoice finance. And it's a term of 6 years for term loans and asset finance, and 3 years for overdraft and invoice finance. And as I mentioned earlier, RLS can be used to refinance existing debt under government schemes. So things to consider in relation to those schemes. If you have a BBILS or a CBILS and you want to take up any of those forbearance options, it's really important that you get in touch with your lender as soon as possible, even if you think you might not need it right now, but might need it. You know, we're going to talk about cash flow. You might be looking forward, looking to Christmas and thinking, I'm going to have a cash flow crunch then. Go and speak to your lender about your options now. Really important. Some other things to think about as well. As Chris said, it's really worth thinking about a plan. So you've got all these different schemes. Some people have used grants as well that they've taken on, to think about how you can map all those different schemes out, the end dates of all those schemes out, and the likely impact that's going to have on your business and your business cash flow, and think about what you can do to manage that. If you do think, as I said, you know, that there's going to be a cash flow, not immediately maybe, but in the next 6 months, now is the time to start talking to people, talk to your lender. Trade associations have loads of really good advice. Speak to your accountant if you're using an accountant. It's really important. But also, this is an opportunity to look for new investment as well. I mean, as we sort of said at the start, many businesses have done quite well in this crisis. The economy is opening back up. So, you know, if you think your cash flow is fine, but you might be thinking about, well, it's an opportunity for growth for my business now, that's equally a really important discussion to have with your lender about how can they support you with those investment decisions and what sort of products are available for that. So I'll be interested in your views about a couple of things, and do put those in the chat box if you have views or opinions you want to share. So on the bounce back loan scheme, on the pay as you grow options, we know that actually not that many businesses as we expected have taken up those options. So we're really interested to know, have you thought about that, decided against it, or, you know, reasons why you haven't taken those pay as you grow options on your bounce back loan schemes. Similarly, we've seen much lower than expected take up of the recovery loan scheme as well. So again, be quite interested in hearing your views if you want to share them about, have you thought about the recovery loan scheme? If you took it out, how did that work for you? If you weren't sure, what were the things that maybe put you off applying for that recovery loan scheme? Just on the recovery loan schemes, as I said, all these schemes are managed by the British Business Bank, and they go through a process of accrediting lenders to deliver these schemes. So every time there's a new scheme, there's a new accreditation process. But we have now got 50 lenders are accredited to deliver the recovery loan scheme. So if you're with a lender who's not yet accredited, they may be in the process of doing that. So that's something else you could find out as well if you're unsure about that. Thank you, Deborah. That was all from me.
Thank you. I think just on some of the calls that we've had previously, Jennifer, there's definitely been calls for grants. that might be part of the reason for lack of take up, because I know a lot of businesses have been incredibly worried about the debt that they're building up, and that's some of the feedback that we've been getting. But yeah, do send in your comments and questions into the chat box. Look, just starting off, and this is quite a general question, really to kick us off. You know, we know the government schemes are winding up, and you've both touched on it previously in your theme, but we've also had indications from the the Chancellor that there's little appetite to extend financial support sort of beyond the sort of current timeframes. So how best, if I'm a business, how best can I understand how I might be affected by these schemes coming to an end, and what options might be available to them? Chris, maybe we start off with you.
Yeah, I think, thanks very much. I think it really comes down to that creating space to plan. So actually setting out, how your exposures that you've already got. So what have you already taken out? Then also, from your dialogue with your lenders, your insurers, accountants, sort of map out where the price pressures are going. We're hearing a lot about challenging and hardening markets in insurance, for example, with premiums for things like professional indemnity insurance going up 200%. Have a talk with your brokers and others just to see, actually, how may that coming down the tracks, how may that be impact? So when is my renewal for that, my policy, all that sort of thing playing into it. So yeah, so just really creating that time to plan, putting it all out there, and then please do use things like the CBI's coronavirus website, where we've got lots of information and fact sheets. There's lots of other industry bodies, so UK Finance has a great website with lots of information. The Institute for Chartered Accountants of England and Wales also has a huge amount of resources. So please do look at these various resources as well as the government's website. And yeah, just taking that time to map it all out, I think is the biggest thing you could do.
Yeah, that's a really good point. And as you said also, Jennifer, it's talking to people, isn't it? It's don't sit quietly worrying. That's the worst thing you can do. Jennifer, has you got anything you would like to add to that? Hi, Jennifer. Is there anything you, in terms of can we hear you? Oh no, we've lost you. Robin in the background. Robin's our tech guy who sorts out most things. So I'll leave Robin to sort out Jennifer while maybe Chris, I'll come back to you for another question. So those that have been hardest hit in the economy, and we all know who those are. But in terms of those hardest hit, what strategies can they employ to respond to the challenges? And are we aware of any sort of there's immediate concerns, but also thinking about that longer term piece and how they can manage that? I know you've touched on that, but I'm thinking is there a bit around how they can get involved? For example, talking to the CBI, telling us what those pinch points are. But I suppose how you manage the immediate, but also how you think about planning for the longer term.
Look, there's no doubt it's a mixed picture out there. And we have to remember a lot of the government's policy priority throughout the pandemic was to save jobs, and saving the businesses often came as sort of alongside saving those jobs. So now as we come out, I think there is a school of thought in government now, job done, let's let the economy correct itself. That doesn't take into account the huge amount of uncertainty that is still out there. And we can see that particularly if we look at the travel sector. And we've seen the power of a collective voice of the travel industry coming together, and now the government is sort of looking again at the restrictions and the various lists and that sort of thing. So I think it really is reaching out to industry groups, trade bodies and your peers, making sure you're coordinating with them to amplify your concerns and get them in. The biggest weapon in the CBI's armory, for example, is case studies. So it's all very well us going to government and saying there's these problems here, but actually hearing from a business how it is faring and bringing some of these problems to life makes such a powerful impact. And I think also, in government as well, due to time and, lots going on, often they tend to look at the macro picture, where industry groups, people like the CBI are very good at is bringing that micro detail up about where people are really struggling.
I'm back again, Deborah.
Yay! Hi, Jennifer. Just before we bring you in, Jennifer, I've just had a comment from Richard, who made a very good point and sort of challenged me on something I just said about talking to others. And Richard, you're right. You shouldn't be talking to just random others. You should be speaking to business professionals. I was implicit rather than explicit in what I meant by others. I did mean professionals. Don't just go down to the pub and get some advice. But sorry, Jennifer.
No,
now we
I'm
can.
just on that point. Yes, definitely getting professional advice is really important. But I think in order to get the advice, I mean, Chris has said this, and we'll probably keep saying this, is you've got to have that plan together. You've got to go in with a really detailed understanding, both of what different schemes you've used, how those are ending, how that's going to impact, but also, as Chris said, where are those pinch points going to come in terms of pricing? I mean, we're seeing, and again, we hear a lot of this anecdotally about transport and haulage costs going up significantly. You know, Chris made the point about insurance. So it's worth doing that, not just about, well, what schemes are coming to an end, but what things you're going to need for your business over the next 6 months, and what are the inflationary pressures on those sort of supplies coming into your business, and just thinking through all of that as well.
I mean, in terms of, I would, if you are reliant on cardboard, making sure you got a long-term contract on that, if you can, do that, because the manufacturer of you know, we have companies, fortunately, like people like Smurfit Kappa, who manufacture cardboard in the country and do the distribution as well. But yeah, there is definitely escalation on that and access in terms of whether we're going to have enough cardboard around, and do recycle as well. You'll have seen the news recently. Jennifer, from a lender perspective, how are lenders thinking about cash flow and that longer term piece? Because, you know, Chris, you referred to it as companies in suspended animation, but actually, you know, those companies that, you know, are stuck at the moment, but are going to be having perhaps those, as government support falls off. How are the sort of lenders thinking about this, and thinking how they're going to respond? Because there might be some really good businesses pre-pandemic that you know, are now at risk. So how's that thought process happening with the lenders?
And obviously, that will depend lender by lender, but definitely taking a longer term view, you know, is where they'll be coming at it from, and wanting to support businesses to get through this. So I think having those discussions early on, as I said before, is important. We know that a number of the bigger lenders, for example, have doubled the resource available for business support. So they have got people there who, you know, have experience and the advice to talk to you about it. I mean, interestingly, again, having sort of doubled that resource and expectation about there being a lot of demand and requests for help, we haven't seen that pick up at all again. So I don't know if that's because, as I said earlier, a lot of companies are sitting on quite a lot of cash at the moment, and are just sort of biding their time a bit. And I think Chris's point as well about, and yours, Deborah, it's, you know, we haven't reached the end of a really, really rocky path for businesses. You keep seeing the sort of slightest thing, sort of Suez Canal, ports now closed again in China because of coronavirus outbreaks that are really sort of blocking up supply chains around the world. So having some sight of that, and in cardboard instance, about thinking about where is your supply chain, how can you sort of build some resilience into that, is also quite important. But lenders very much are looking to do as much as they can for businesses, not just to keep them going through the crisis, but as I said earlier, you know, there is a bounce back in the economy. Some businesses have done well. The one thing that the crisis has done has actually accelerated innovation in some sectors, and so lenders are really keen to support that, and support that investment and help businesses to grow and help the economy to grow as well.
Thank you. There's just a comment coming in from John around interesting statistics on RLS take up. Product was announced after firms knew about the CBIL deadline. Firms who needed help possibly took up CBIL for certainty and therefore didn't wait until any later scheme became clear. Maybe take up will increase later.
Good point.
Yeah, very good point. Thanks, John. Chris, in terms of the role that CBI is playing, what are we doing to, you know, support members through this period? And you know, what can members do to support us, make sure that we're you know, able to speak on behalf or with them as effectively as possible?
I think the biggest thing, Debs, is using the power of our networks, and the fact that we've got such a broad range of different sectors in membership really means we can reach down and bring those case studies to life, and then also connect those case studies and individual problems businesses are facing with wider trends. So work very closely with, for example, our economics colleagues, our economic policy colleagues, looking at the next few months and seeing where these different pinch points you know, we create a story about the challenges supply chains are sort of facing. Now, what we can do is we can give guidance as well. So we've created a whole series of guides with people like the ABI, UK Finance, the British Insurance Brokers Association, but they are guides. As the point was made earlier, you really should seek professional advice as well from qualified brokers, intermediaries, and people like your lawyers and accountants. But working together with those people, we can sort of bring those stories and make the powerful case to government about what needs to happen and certain changes ahead. And I think the thing is, the data all says, as Jennifer was saying, insolvency is at record lows. You know, companies are sitting on a lot of cash reserves, but there does remain a lot of uncertainty out there. And we know from our conversations that that situation can change very rapidly. And it could change in as little as 6 weeks for some businesses. We know the variety of different pressures, the global strain in supply chains that Jennifer touched on, and that sort of thing. So it's trying to dig beneath the data and make sure that whilst we want to be positive, we want to keep this optimism going as the economy unlocks, and the CBI has got its great new vision for the economy, sees the moment, that we do need to be aware of these other challenges out there that could derail progress we're making.
Yeah, and you know, that sort of call for case studies is incredibly helpful. Actually, especially, and sorry, it's slightly going off tack here a bit, but on the employment and labour market, we're really looking for case studies on that to sort of bring that to life. So we've had quite a few from hauliers and solutions as well. So what are the solutions? You know, the old, perhaps, you know, the old route of, you know, bringing workers from the EU, that isn't such an option. So what are the other solutions that people can that we can look at? So do send those in. Look, I suppose we're talking about increased optimism, and we're talking about the economic recovery, and you know, it does feel like, and it does feel, you know, we're going out and things are busier, the roads are busier, but today's, you know, call, we're talking about still there's lots of uncertainty, and Chris, you said, you know, things can turn on the head of a pin very, very quickly. Are there any pinch points that you can envisage for SMEs, both of you, that are perhaps coming in the coming months? And is there anything that either government or industry itself can do to sort of release that pressure a little bit? So Jennifer, I might come to you first on that, and then Chris, to you.
Yeah, I mean, it's hard to predict in what's an incredibly uncertain time, but I think there are two things that are real sort of potential unknowns in this. And one is consumer behaviour. We are seeing some people sort of get back to normal and start going back to sort of a pre-COVID pattern of life, but a lot of people just aren't. A lot of people have got really used to just spending their time at home. We've had feedback from some employers that, you know, they're struggling to get staff back off furlough, for example. So I think it's hard to predict about, you know, will people, if all the measures are lifted up, will you suddenly get people rammed into pubs and restaurants and going to those sort of big mass events that they used to have? Some people will, I think some people won't. And then Deborah, you touched on the whole issue about skill shortages. And for those people who would normally, you know, who are very seasonal, so would start ramping up employment as you head in towards Christmas. So again, retail, hospitality. How is that going to play out? We're seeing in the States what they call the Amazon effect on wage inflation, pushing sort of staffing prices up quite a bit. Is that something that might happen here? Are we starting to see that already? So I think those are two things. And the third would just be back to what we've already said, is the ongoing problems around supply chains and price inflation in sort of key component parts and products.
Chris?
Yeah, I think Jennifer's points are all spot on. I think further to this, we're hearing an awful lot about insurance, both the end of the trade credit insurance scheme, which helps supports a lot of supply chains in areas like manufacturing, advertising, that sort of thing. So big concerns there about people having their coverage withdrawn, which would then draw a lot of supply chains to a halt. So big concerns on that front. Also rising premiums elsewhere. sort of employers' liability, directors and officers' insurance, and that sort of thing. But actually, I think the two big areas to watch are rent and tax. So rent, CBI worked with others to secure a further extension of some of the measures for the hardest hit sectors. But there is no doubt a lot of landlords feel hard done by and don't feel they've had the level of support that other businesses have, and are keen to sort of claim back what they can when they can. So when that moratorium comes to an end, I think a lot of landlords do want to pursue disputes, and that is part of the reason the CBI pushed for a binding arbitration mechanism to help deal with that. And on the tax front, I mentioned the letter from the Business Secretary to the Institute of Directors and R3 saying there would be managed arrangements. There are £40 billion worth of VAT deferrals out there. And we have also seen the partial return of Crown preference. This is where the tax authorities come above other floating creditors if a business is facing problems. Now, how does the tax authorities deal with that change and how they behave towards businesses is also going to be very important in this post-COVID business environment. So I think definitely the rent and the tax areas are definitely ones to watch.
Can I just flag on that?
Sorry, yeah, thanks, Jennifer. Yeah, sorry.
No, flag on that. I mean, as well as, it's very good points by Chris, but the government have brought some sort of tax incentives through recently. So super deduction capital allowance. Again, we're getting a slightly mixed picture about take up of that. We've had some reports that take up that's been really good, as sort of encouraging investment, others that people are finding it a bit hard to understand. So when you're thinking through your planning and your options for cash flow and your options for growth, also think about these different tax measures that are around there and get some professional advice on which of those would be useful for your business.
Yeah, thank you. And yes, professional advice, or else we get told off by Robert. So just moving on from the tax piece, well, actually staying on the tax piece, with the scale of sort of tax deferrals and sort of partial return of Crown preference, sorry, this is a question that's come in, so apologies if I'm stumbling on it a bit. What role do you think HMRC are going to play in a post-COVID environment, business environment? Who would like to go first on that one?
I'm happy.
Budget, just say, we have seen reports in the press that HMRC are very conscious about, their role in supporting businesses to go forward or otherwise. So you'd hope that they'd be mindful of that role to play. And obviously, as long as a business is trading and doing well, then that benefits them, it benefits everybody. So you'd hope that they, and the signals that they have given in August, they have given some very positive signals that they are, keen to work with businesses and be managed in the way they approach these issues.
Yeah, just echoing that. Yeah, very positive signals. We're also aware HMRC is doing a lot of training and is aware of the role they're going to be playing in some of these discussions. So I think, yeah, very important role. I think they're aware of the challenge, and as Jennifer was saying, lots of positive signals. So it's one we'll be keeping a firm eye on.
And sorry, can I just add as well, I think, sometimes there is a slight disconnect between what government says and what government does. So I think, Chris and Deborah, this is one for you to really be, and for your members, to really be seeing how this is playing out on the ground, because I think as trade associations, that's something we're in dialogue all the time with HMRC about different tax initiatives. It's something we could work together if it's not working out in the way businesses hope for, to take that back up the chain, as it were.
Thanks, Jennifer. Really good point. There's one coming here, which is quite a long one, so I'll try and shorten it. It's talking about the insolvency wave that we're talking, which Chris, I know you've referred to as sort of suspended animation companies. So it's been talked about for a long time, with the suspension of sort of wrongful trading provisions and other measures. Is the wave coming, and when do you think it might land, and how big do you think it might be? So those companies that suspended animation, how big do we think it might be, and when do we think it might come? Bit of a gnarly one.
One for Chris, I think.
Yeah, let's go, Chris.
Right. Yes, I think. Look, everyone's been talking about an insolvency wave even before the COVID pandemic for a long time. and that we've got a lot of businesses that aren't so productive, and maybe it's time some of them that they consolidate and will disappear and that sort of thing. What we've seen in the pandemic is a huge scale of support which was required to keep businesses going, to preserve all those jobs. And coupled with that, we've had the various moratoriums, as well as suspension of some of the wrongful trading provisions and that sort of thing in the insolvency landscape. So you've got businesses pumped full of cash, and then you've also got the suspension of normal state of play, as it were. So that sort of smoothed a lot of this out. That doesn't mean a lot of the problems goes, and we know that there is a school of thought in government that it's time for a shakeout, and that some of these businesses will naturally go, and the innovators that have done really well will come out. And we've also seen a whole range of consolidation, and mergers and acquisitions are going on out there. So over the last year, I believe it is in excess of £50 billion worth of private equity deals with people buying firms. Lots of activity going on that front as well. So we've got this weird environment playing out at the moment. I do think a wave is coming. Just for the reasons I set out, that actually, whilst there's a lot of good news, there are some fragile things, particularly in the hardest hit sectors, that are still coping with real uncertainty. I don't think it's going to be as big as people thought, but it is still going to be significant, and probably likely to be in late autumn, is what we're sort of looking at, and a lot of industry contacts are sort of suggesting. How that plays out with the government further extending certain measures and that sort of thing, we will see. But that's certainly, I think, what we're sort of feeling at the moment.
Now, just add in as well, Deborah, I mean, we've heard, and it would be interesting to get CBI and your members' views about this, but anecdotally, that there are a lot of business owners sort of in their mid-50s, coming up to their 60s, have, been really ground down by the crisis and are just looking to exit businesses earlier than they probably would have planned initially. So we might see a wave of that, of not necessarily insolvencies, but people just thinking, I'm going to go for early retirement and just close my business down. So I don't know if you're seeing that as well.
It is something we've been picking up for our network. So it's actually a trend. So this business transfer, it's been quite a big trend in places like Canada and Japan. The UK hasn't had so much of it. After the financial crisis, I think a lot of people's retirement plans were sort of torpedoed by the crash, and they stayed in business a bit longer than they intended. So before the pandemic, we were starting to pick up more of this, particularly family-owned businesses where the next generation don't necessarily want to work in the family industry. They're sort of going into a different sector or that sort of thing. So the owner of the business sells it on. But we are picking up an increased level of this activity. A lot of our university members and others are seeing that business transfer piece coming through, and that's also playing into that wave of consolidation I was talking about as well.
Thank you. And just actually on that sort of demographic piece and sort of the age profile, a couple of companies that I've spoken to have been making, have had to do some restructuring and made some redundancies. One in particular talked about that they maybe lost too much grey, so they put out the voluntary redundancy, and they've and obviously older workers is more appealing sometimes to older workers, and they felt actually they'd lost too much of their experience, which was quite an interesting reflection. So I know there's one business I've been talking to, it's like just be careful that you get that balance of who you let go and who you don't. Now Rich has made quite an interesting point in the chat, which is actually on this, is if a business is letting staff go, before telling employees, check if you have legal protection insurance, either as part of commercial insurance package or separate policy, or for example via Chamber of Commerce membership. If you have cover, discuss what you can do with your insurance broker and or insurer. It's a condition of the insurance that you do this. So yeah, also check all the small print of your insurances before when things change. And we had a session with Marsh a month ago, and it was very much, when things change, make sure you talk to your insurers, because yeah, you don't want to make yourself invalid at all. So I'm just conscious of time. We've only got a couple of minutes, so I might just come for very, very final thoughts. Thinking of that second wave, and if that autumn, and no one wants to talk it up at all, but it's always prudent to prepare. how can businesses prepare? Is there any sort of a top tip that you would give to companies? And I will ramble for a minute so you can get your brain cells working, and then I'll be mean and pick on Chris because he's a colleague, and Jennifer, you can come after so you can think more because you're a guest.
Thank you.
So Chris,
Yeah,
anything businesses can do to prepare in case there is that sort of wave?
Yeah, and new variants as well in the background. Look, I think the best thing you can do has been our big message this webinar is taking that time to plan. So looking at how you are now and making sure you're looking at your liabilities in the round, so you kind of batten down the hatches, ready for what may come down the tracks. Now, maybe that'll be the end of it, the vaccination program, the booster program, that will see us through. But if you do your best to make sure you're covered going in, that'll help you hopefully weather any further uncertainty.
Yeah, thank you. And Jennifer, any final thoughts from you?
I mean, obviously I agree with Chris, planning ahead, doing that mapping and just thinking through, I think we've got a bit comfortable with this, the concept that lots of adults have been vaccinated, but I heard from a small business owner last week that had 2 very young children at nursery school. They closed the nursery because 1 or 2 kids had been tested positive for COVID, even though they weren't ill. So I think you're still going to see this choppiness in terms of staff, having to take time off, not necessarily because they have to self-isolate because of childcare issues. So plan for everything, and plan for a few unexpected as well. And, things are definitely moving in the right direction. But as Chris and I have kept saying, it's a bumpy road, and it's going to be a bumpy road for some time to come.
Yes, and I think I'm one friend, one colleague who is, I would also say as a friend, have got COVID in the past past week, and they've had their first jab, just had the second, and actually had been struck down quite nastily by it. So it's still it's a very, very nasty virus. So it hasn't gone away. Right. Thank you so much, Jennifer, for joining us. And Chris, it's always lovely to see you. Got the pleasure of seeing Chris in person for the first time a couple of weeks ago, first time in 18 months. So that was great. But lovely to see you both on screen. And thank you everyone for joining us. And I think my little lockdown puppy is going a bit nuts downstairs, so I'm going to go and retrieve her. But take care, everyone, and see you soon. Bye.
Thank you so much, Deborah.
Bye.
Bye.